good day, all. Ira Epstein, and yes, I'm doing this remotely, so I'm not in my studio where you get to see my pretty face, but this is your financial market wrap-up. It is Thursday. It is the 27th of October, 2022, and the time about 5:35 p.m. Central Time. So for the next few days, this is how I'm going to be doing everything. Then I'll be back in the city middle of next week or so. So we'll see what goes on there. It's beautiful in California. I got to tell you, I'm in the mountains here, and it's probably 30, 35 in the morning, and daytime it can be 70. And we're rather high up and in the middle of a forest preserve, so not a lot of people. Don't have to run into anybody, and thank God my son has Starlink, and that's what we're using as the satellite system for me to get this done for you. Okay, so here's where we're at. You are looking at a market that I've been telling you got to pay attention to earnings, and it started off with the earnings a week ago where the bank earnings were great looking for most of the banks, and then we started getting corporate earnings, and they look good. Netflix was a big surprise to the upside. That carried with it Disney and anybody that had a streaming product to a certain degree. The other markets getting up with it, but then I gave you the warning. I said, now this is the week that we're in right now, where the big tech names come out to play. And the market is expecting from a Microsoft poor result, from Amazon poor results in the marketplace. It's one after the other. And it's exactly what's occurring. So we had a rally that carried most of these markets up to the upper Bollinger Band. They reversed course, and it's exactly what I teach they should do in my enhanced Bollinger Band series. Let's take a look and you'll be able to see what I'm saying. So first, the S&P 500. You can see the bounce that has come about. You're up for the week, but you're up what? 0.94%? I don't think that's something on a weekly basis to be that excited about. When we take a look at the daily charts, today we lost a little bit of ground. The trend has been clearly, and you can see this here, to the upside, higher lows, higher highs. We talked about that. This fit in to me from what I was saying. I was expecting to see the bonds and the note markets rally in the futures. And the reason was I thought the selling pressure would come off this just before the FOMC meeting. The market getting all that talk that it always does. Oh, they're getting closer to a pivot than people think. I don't care if they start slowing down the interest rate hikes, do you? But they're going to stop them? No, not so fast. They could. If the CPI and the jobs data slipped, we had the PCE number came out today, and that number was down 0.2%. That is in the right direction. And we also saw that unemployment claims, both continuing and daily, climbed again. Those are the things the Fed wants to see. Yes, that would get the Fed to slow down the rate and eventually stop these hikes. But you need to get more than, first of all, you need to get a series of events, and you don't have the CPI falling, the jobs just yet. Next, I take a look at what the market's doing. We see the swing line is up. Okay, resistance comes in here at the 100-day average. Support is back at 37.22, let's call it 50. When we take a look at the Bollinger Band, oh my gosh, market started hitting these numbers right up here, and I was telling you as they were coming there that you're in an overbought condition. Overbought conditions in my 13-part video series. You learn how to handle the market, what I teach at least, I think the pro and the algorithm trader does. My opinion on it, but that's what I think they do, how they handle the markets down here, how they handle the markets up here on the rallies, and I was telling my traders out. You know, if the trend is up, you still got to come out. You're not embedded and you're overbought and you've hit a target. In the NASDAQ, as we're getting this roll now, it's getting uglier and uglier. We just broke through a previous low. So the market has gone from all purposes a lower Bollinger Band, just missed hitting the upper and right back down. Okay, and it's not trending anymore. When we step over to the Dow, same thing here. Or is it? It's not. Let me explain this. Until the red line closes under 79, you have the enhanced Bollinger Band. But you never buy into a Bollinger Band. So you've got the reason on breaks this market will get bought, but a break has to be to a certain number. It hasn't hit it. For those of you that are my morning subscribers, you know that number. I mean, it's there every morning for you to work with, and it's simple. It's right in front of you on your chart. Well, this is not it. So I'm still looking for it to pull back, but until the red line closes under 79, I remain in the bull camp, but I would not buy Bollinger Bands. When we look at the Russell, overbought into the combination of the 100-day average and the Bollinger Band, for me, that's a get out of everything. Again, it's not embedded. It's hit its targets. Away you go. What about the VIX? I said yesterday to the people that were looking at what I was doing, I said if you hit the lower Bollinger Band, the pros are going to write puts. I think I said this 2 days ago when I was traveling all day yesterday, as you know. Well, yesterday the Bollinger Band low was 27.26. 27.27 was the low. Today it got hit. So your low was 26.94. The lower Bollinger Band is what, 26.80? Let's see, is that 26.80? I think it is. So did it hit? It looks to me like it missed it by about 14 points. I'll check that tomorrow when I look at everything. But let me just see something here. I was trying to bring this up. Yeah, there it is. That's what I wanted to see. The way I've done the numbers for this, I can't do that with you. I'm sorry. There's a way that you can do this, but I changed the numbers for the TV appearance that we're doing, or what I call YouTube appearance, and I can't get those numbers to come on the screen. But I want to go back and just say this. If you hit that lower band, that's where the pros write a put. They'll go into the report with that, looking for the 18-day average of closes, right or wrong. I see them do that all the time. I would not have my clients do that into an FOMC report. I'm telling you what I think the pros will do. When you look at the bonds, you lost the embedded reading. Now, if you understand what that means, when you get to a day, watch this on the left, bottom left, right here. There it is. You get a 30 reading. You're over 21. That's your first time you did it. The odds favor you're going immediately to the 18-day average of closes. And from there, the market will make a decision what to do. Well, the timing of that's pretty good. Look at what happened already here. You lost your embedded reading right there. I'll take you the day before. You didn't lose it. You lose it. You should go to the 18-day average. You did it. That's all I care about. It's overbought now. It's worked off that whole position. It's not in a trend anymore. In the dollar index, you fell for the first time yesterday, hit the lower band. What do I teach you? You've watched me over and over here. When you hit the upper or lower band, you look to see what the stochastics are doing. Obviously, my slow stochastics are going to look a little different than yours. Don't get frustrated. If you're a paid subscriber of mine, I'll send you the formula and how you modify them so that they match mine. I've been using this version of mine since I knew the developer of slow stochastics, George Lane. I ran it by him when he was alive. I showed him what I had found, and he thought, his answer to me, that looks very interesting. He said, you're onto something very good. And I think I did. In the euro, same thing. You get up to the upper band, you're overbought, out you go. Nothing to hang around town for. Now in the British pound, it's identical again. I mean, these are the things you look for. You look for the reasons where markets make moves and what can you do with them. Then we get into Bitcoin. Now I'm in November Bitcoin here, as you can see. I wanted to look at the last quotes that you would see on the regular screen. You've hit your upside targets. I'm ready for a pullback to the 18-day average. I don't think you're going up there. Plus, I'm not convinced I want to own anything in Bitcoin just yet. I'd like to see how the market reacts. It is still tied, as I pointed out. The correlation now is to gold, not to the stock market, and gold still has a headwind. Then we get to the Brent versus WTI crude, and this market has been lifting itself back to the upside. Let me see what we have here. Sorry about that. Here we are. Higher lows, higher highs, right into everything I tell traders where they should liquidate. The 200-day average, the 100, the upper Bollinger Band, everything at one. Nah, you own it. I think the smart money is going to pass ownership on to other people. When you look at the heating oil trying to come up here to the upper Bollinger Band, possibly more important to me, I told you that I thought that heating oil and natural gas were going to start getting bids in the market as we move further into the fall. And then when we hit the winter, I'm expecting to see the markets come alive. Now, not dramatically, but alive in the natural gas. Why? Because we're going to have more natural gas production. We just keep getting more and more. So the idea of getting back up here, I think you write that off. I think that, the question is, what can you do back in the Bollinger Band top and bottom? That to me is a more realistic approach to what it's going to do. So with that, you heard me talk about the Bollinger Bands, what we do. It's 13 videos, each one about 10, 12 minutes long. You sit down, you learn, you have them all done. The course, you'll finish the course in 2 days. Easy, and learn it. But we give you more time than that, as you can imagine. Then I give you 2 weeks with me free in the morning subscriber videos for both stocks, ETFs, spiders, and futures. So that, and then the charting software. The value of what I just mentioned is about the price of the course, okay? And it's under $100. So I think you'll find that what we give you, what you get back, and what you learn adds a value. I'm Ira Epstein. You have a good day. Talk to you all later.